Good morning. It is 9:27 a.m. on February 7th, 2023. This is Joe from Ask Joe About Money, and we're going to try something brand new this morning. It's a couple of minutes before market open, and what I'm going to attempt to do today is take you through the open as I see it and what I'm seeing in real action. So by this point, I've already reviewed my 60-minute chart. I've already done all my pre-market preparation. And now we're about to open, and I don't even look at a candle until the first 5 minutes of the candle, or the first 5-minute candle closes. But let's see what's happening. The first thing I'm going to look at is, so yesterday's price action was right here. The overnight price action. So this was the close. Where was the close yesterday? It was here. Okay, so essentially the overnight price action, there's the high. There's the low. The market's going to open down there. So why am I doing this? Why do I care? Because I'm going to switch my charts to get rid of this overnight price action. But this gives me an idea of where the high and where the low for the overnight action was. So we're opening up very close to the low. So what does that mean exactly? I don't know. But what I could tell you is that let's make this that's the high of the overnight, and let's make this the low of the overnight, because we're going to get rid of some of this stuff in just a second. I'll show you. And as you can tell, the market is going to be opening here, and I am not going to be trading on that opening bar. Most times I don't trade in the opening half hour. A lot of times I don't trade in the opening 1 hour. Why? The first 30 minutes, the first hour is amateur hour. Okay, the reason why I know that is that's the playground that I played in when I was an amateur. However, the open is, as you're going to see today, is very important for us to figure out, to almost get a temperature of the market. So right here, the market's open. And now I'm going to be transitioning. So I have my high of the overnight trading session in, and I have my low, and I have a general idea of what the market did. So just kind of a mental note. So what did the market do overnight? Well, the market closed. It went back up to the highs, trying to find some buyers at the regular session highs, and we couldn't. So we came off. We had a sharp sell-off. That must have been news there overnight. And then the market came back down. It didn't get as low as yesterday's low. It bounced back up, and now we came back down. But the range is pretty large. We got 41.36 to 40. No, it's not very large. About 25 points. So 25-point overnight range. Yeah, so let's take a look here. Now what I'm going to do is let's get rid of this box, and I'm going to go and just turn on my regular trading session, because this is going to show me the gap. Okay, so this is the gap now. So now we can see it from a different lens, right? So now we're looking at the market from this lens, and okay, so far the market gap down. That's what we close here, 22, 10-point gap down. That's a small gap. Let's see what happens here. And so I have some of my lines drawn in from yesterday here. As far as my trend lines, I like to just keep them in there just so it gives me an idea. This trend line, let me draw this trend line in from here to, all right, it's fine. So let's see, what do we have in terms of trend lines? So we're going to draw a trend line from these tops here. And let me draw a trend line from yesterday's low to this bottom here. All right, the next thing I'm going to do is let's check for some news in the calendar. Hang on one sec. It looks like the only significant news that we have today is 12:40. Powell speaks. I'm not sure exactly what that's all about, but I saw that on the calendar. And so now we're just watching and waiting. We're looking at the 5-minute bar. Okay, let's just take a look at what the 60-minute looks like, just for context, right? So let's see what we have here. So the 60 minutes, so we're below the moving average. So again, we're still working on, in my mind, okay, how I'm looking at this on a larger time frame is that, so again, the market pushed up, market failed, right? How do you know it failed, Joe? This at one point was a green bar and they sold it all the way down, closed it at the low. And since that point, they haven't been able to get above that. So this could be, again, we could be developing a head and shoulders, left shoulder, head, and right shoulder. This could be a potential short to come down here, a potential rejection area. Remember, the longer that they don't find buyers here, and now we're consolidating and we're in a tight range on the 60-minute chart, that energy eventually is going to have to resolve itself. I mean, unless you believe the market is going to stay in this trading range box forever, at some point it's going to resolve up and down. And just because the activity has been tight the last couple of days, remember, there's still a lot of trading within there, buying and selling. And it's just not enough energy to push it out of this box and not enough energy to push it below the box. So I always like to take a look at this because I'm always looking for the larger swing moves. So I like to see, well, as long as we're in this box, we're in this trading range, right? Doesn't mean that we can't trade. I mean, we can trade from here to here, but I am looking for larger moves, maybe from somewhere down to the bottom of this box to the top of here, or maybe from the top of this box to down here. So we'll see what happens. So this gives me a really clear picture. Then, so we're on this rejection here. There's a ton of resistance up above. Let's look at the 15-minute chart. And on the 15-minute chart, we get a little bit more of a granular view. And this is the thing, when you're looking at charts, everyone wants to know what time frame you're using. And remember, what I'm looking at right now on this chart, this isn't really the market. This is just my interpretation of the market based on the time frame that I have on here, based on the colors that I have. So these are just tools that help us understand where the buyers and sellers are. What we need to keep understanding is that the market is about buyers and sellers. It's not about indicators. It's not about prediction. It's about, I'm just showing you right now, based on what the market has said, is that there are buyers down here and there are sellers down here. And when is that going to cease to be? I don't know. But right now, that's what's happening. So would it be smart to take a short right here unless we see some decisive action? I don't want to be shorting here. The bottom third here is where, this is right now the buy zone. Up here is the sell zone, right? Oftentimes what I'll do is I'll just do it this way. I'll say, okay, well, and notice there's no rush, right? Never be in a rush when it comes to the market. It's just not a good idea. Not a good idea. So if we look at this zone, okay, roughly we want to be selling up here. And again, this is not precise exactly what price. I don't know what the market's going to look like when it comes up there. So we'll find out. But that's where you want to be buying. Again, as of right now, that could change. But so we don't want to trade like an amateur. We want to trade like a pro. So this is what the pros do. All right, so now we're going to put that's going to go in there. Or actually, I had these upside down. The red should go up top. So again, so right now, this is our sell. So what I just did here on the 15-minute chart, this is the buy zone, and this is the sell zone. Again, if the buy zone breaks, this will become a short. So right now, we're hanging out in the buy zone. So doesn't mean not willing to short, but let's see what the market is telling us so far. So far, what has happened is this bar, it's almost a complete doji. So no energy up, no energy down. So at this point, I'm starting to formulate, we're almost 10 minutes in. And at this point, I'm starting to formulate, it looks like as of now, we are in a range bound open. Okay. So if anything, I would want to think long, but again, that just means a move from here to the top side of this range. So as and I don't really like trading these tight ranges because just the margin for error is just so great that I see the risk. I would rather wait for a breakout, but again, it's all going to depend on the price action, right? So it's all going to depend on the price action here. So let's see what happens. We need patience. Always patience. Yeah, so I decided to, I'm going to be honest with you guys. I mean, the reason why I decided to start doing these morning live market open videos, and today's day number one, is what I just did here on the chart, what you're seeing. I haven't been doing it. I've been using my intuition and just kind of falling off the process. And, that's what you're going to learn with me is that this is a never ending process. Look, I'm a professional trader and I trade full time, and yet I'm imperfect, right? Yet I get lazy like everybody else. So this was my way of re-engaging, because this is how I became successful, doing what I just showed you right here. What you're looking at on this in the screen is invaluable, because I've just mapped out for you and for myself, right? Really, is that what's happening in the market. This. I'm not giving you a buy signal or a sell signal, but this is going to prevent a lot of grief of not understanding why a lot of trades aren't working. We have to get to clear inflection points. So, in my opinion, we're going to have a break, and I'm going to be there for when that happens. Because look, is this, there's a couple of ways to look at this. This was the move up, right? That was the move up. So we're at 50%, right? So we're at 50%. So this whole consolidation zone is at 50%. So I I would not be surprised if the market consolidated here and then at 50% and then broke out to the upside, which means that you could capture this move plus another. In other words, if I'm looking to the long side, what I'm looking for is the reward here to the upside is going to be, that's just to get to the old high, and then a measured move of, let me copy this, and then a measured move of that size just to get from this measured move to up here. So now again, those are really long-term targets, obviously. But the point is that we are trading within this. This is not going to happen all in one day. But the point is that at some point, we're going to have this, or this may come up to here and then fail up here, right? But at least you're using a risk box of, this big roughly to get this reward. And then the downside, same thing. I mean, the downside, if that's 50%, that means that just to get down to these lows here, that's that. So this is a very exciting area. Now, the thing is this, is that everyone thinks that, well, we're in this, I'm not going to trade until I see a breakout. Well, in my opinion, that's a mistake, because why is that a mistake? Well, it's how well you could trade inside of here, and that could be not taking the bad trades. That could be trying to trade here at support and then trying to trade here at resistance. I don't know. I'm not sure yet. But the point is that what happens and how we trade and how we manage inside the box is going to depend on how we get rewarded outside of the box. Because let's just say, for example, I get long somewhere down in the buy zone down here, okay? And then the market from that point goes up here and actually breaks through and continues up. Now, along the way, I'm going to find spots to add. But since my initial price was so good, I could have a big trade on my hand, I should say. That being said, I'm never thinking about that. All I'm thinking about is that to get in tune with the market. Here we are about almost 15 minutes in. And what is the market doing? Well, what is the market doing? Can you see what the market is doing?
Order filled.
So what the market is doing at this point is we have no red candles. We have all green candles. Not very big green candles so far. Okay. We have about a minute and 15 seconds left in this bar. Let's see what happens. I guess I'll do this for another 10 minutes. So that'll give us five total bars, 5 minute bars. But it's all about the preparation, right? It's all about the preparation. Uh, I picked 5 minute bars because they fit my personality, they fit my temperament. Now notice this. Okay, this is something very interesting here on this green candle. Okay, there was a wick on top, but this green candle closed, and look, we call this a gap. When the next candle opened, so that this candle closed at 41.1650, and this opened at quarter, which means it didn't even trade there. They sold it before that next candle could just could open for the buy on close or sell on close in this case. So that to me is giving me an indication that, all right, this is more confirmation. This is just a range open, right? Because there's just now we had two green bars, and look what they did right after that. So now this is I'm taking the temperature of the market. If this was a really strong market, that wouldn't have happened right there. Now again, as I always say, this could change in 5 minutes, right? This could change in 30 seconds. The next bar can look completely different. But as of now, what I'm noticing the market's doing is that it's not finding any buyers up here. So does that mean go short? No, I'm just making an observation because, again, we're in the buy zone. So if I saw so let's think about what would get me short, right? So what would I have to see right now to get me short? And really what I would have to see is a big red bar, okay? A big red bar close somewhere near its low and below support. So, if I saw something like this, I would want to sell the close of that bar. To the upside, I'm not really interested right now. The reason why I say that is because I'm not seeing any enthusiasm of buyers here. Unless I'm willing to buy right now, I'm going to be buying. If I need evidence of buyers, I'm going to be buying somewhere in the middle, if not the 2/3 or 1/3 of the box. So at this point, I want to be selling up here and buying down here. So it's going to be hard for me to get long. Unless I see some really big green bars, then I would consider it. But at this point, and I'm not predicting, I don't know what's going to happen. This support could hold and it could go up. So I'm just watching and I'm seeing, and it wouldn't be that hard to convince me on the downside here because, we had this failure. We had this failure on Friday, between Thursday and Friday. It went up here past the resistance, and I talked about this. And then what happened? What happened was it rejected it. And then it tried again and it rejected it. And now it's here. Why aren't we going back up? It's been here now for that was yesterday, 2 days, really. So I don't know. It's just, and again, it's not about my bias. It's just what the price action is showing me so far. Is that okay now? And now here's looks like it's what's going to be a big red candle, and right now I wouldn't want to short yet because again we're still in the buy zone. We're at support for the day, so I don't want to short there yet. I want to see some decisive action, but let's see what happens. Yeah, very muted price action, and this is something that I look at because the bars are small. There's nothing's decisive. So again, this is what we call this amateur hour. There could be what I'm looking for, and again, I don't have a goal. I believe we'll talk about trading goals in another session. But you know, my goal, if there was a goal, because I don't believe in financial goals, because the market doesn't care about that. So I feel like it's a setup for failure. What I do believe in is having a direction to be professional, right? And as a professional, my direction is I want to capture between 2 and 4 swing moves a week on the S&P 500. And that will make your week and that will make your month. And that means there's a lot of waiting. The way I trade, there's just a lot of waiting, maybe a 1 trade day or 2 trade day, a no trade day. But hey, I'm here to make money. I'm here to exploit the opportunities that the market gives to us, and I'm here to be professional. So, all right. So now it looks like they're buying. They bought this low. They bought this low. They didn't make this close as a big red bar. So again, this is what happens at support, right? We knew this is support. This is what happens at support. This is what support looks like. But then now we have to look at what is the reaction. Is this going to slingshot up, or is this going to just peter out and just maybe, what if, and again, this trend line is not to predict, but what if this comes up to this trend line and it rejects here? Would I be looking for a short there? Maybe. Let's see what happens. So what do we have? That was the overnight low. Is the overnight high. Very muted price action. Very muted price action. But here's the thing. Okay, here's another important lesson that I've learned is that a lot of times the market lulls you to sleep. And then, all these things that I talk about, this is not stuff that I read in a book. This is stuff that I did, stuff that I learned. And hopefully you can learn from me, because I know there's a lot of mistakes that I didn't make because I learned from my mentors. I continue to have mentors. I believe if you don't have mentors in your life, a mentor could be just someone that you follow on YouTube. It doesn't have to be someone that you're living with, right? That's teaching you about life and trading and whatever. But, so one of the things that I learned is that when the market ebbs and flows, and from volatility to lack of volatility and volatility to lack of volatility. So like the last, yesterday, there was not much volatility, right? Now, today so far, not much volatility. Now, the thing is that we have to be on alert. It's our job as traders, because what if that changes in one bar, right? In one bar, if we have a bar like this, we just went from no volatility to potentially high volatility. So the reason why I say that is we have to be mentally prepared at all times. We're going to war. We're going to battle. We have to be prepared. We have to be ready. So this is what's happening now. How long is this going to happen? This low volatility? It could be 2 days. It could be 4 days. It could be 2 hours. It could be 2 minutes. I don't know. And so just sitting here and, I look at so many different things while I'm sitting here and waiting. I like to learn about the market. I'm a student of the market. I like to read different things. I read different books. I read different reports. But I don't want you to confuse that with I'm reading that because I'm trying to front run the market. I'm trying to guess where the market's going to go. That's not the game. That's not the game. The game is, I like to learn. The market is so big and there's so much data, you'll never get your arms around all of it. But during these slow times, like right now, what I'm doing is I'm looking at different things. I'm looking at different reports, and I'm looking at different news. And what that does is that keeps me engaged with the market. There's nothing that I'm going to read today in an article or listen to a podcast that's going to help me in terms of, well, now I know whether to buy or to sell. How do you know whether to buy or to sell? Well, I'm going to let the smarter, more sophisticated people with money, with the big money around the world, let them figure that out, right? Because I can't play that game. So let them figure it out. And then once they figure it out and they say, you know what? we need to start buying this market, I will see green candles. If something happens and news comes out, I don't need to interpret the news because the market is going to interpret the news. So we have to remember is that being aware of the market is important. I'm constantly looking at news and figuring out, not figuring out, just being in tune of what's happening, earnings season, et cetera, et cetera. But that has nothing to do with what trades I take. Only the market could tell me that. I am not going to trust my opinion or my analysis, because then what do you do if that's wrong? Because I mean, at best, and what we're looking for here is that if you could get to 60-40, 60% winners, 40% losers, you have a pretty good winning system. And so that means you're losing 40% of the time. And I believe that over time, my winning rate's even lower because my multiples on my winning trades is so high that I'm willing to take a lot of shots, and a lot of them are losers. So that's okay. But yeah, I mean, just having the patience to sit here. Here we are, we're 30 minutes in pretty much, and I haven't taken a trade, and I'm probably not going to take a trade, to be honest with you, for at least a couple of hours. Then we have lunch. So if the market resolves itself one way or the other in the next couple of hours, I'm willing to take this short. I don't know. I mean, a case for me to take it long, I would have to see really big buying pressure, but that's, at this point, it doesn't look like it's going to happen, but we'll see. So that's my morning, the open. Let me know what you think. Please leave comments, and don't forget to register for our webinars that we have. They're free, and you could ask me different questions. And with that, trade well and manage your risk.